Okay, students, wish you a very good evening. Can you hear me? Puta, can you hear me? Okay, Akila, thank you, Puta. Okay, so very glad to see you all. I hope you are doing great. Yes, amidst trying situations, country situation is worse. But however, Buddha always have a positive attitude towards everything because things will get resolved, right? That's how things are. Things get to normal, right? So that's what we have seen always. So things will be fine. And the thing is, you have to keep up your educational activities very well. So how many of you tried Google Calendar? Can you raise your hands? We have not that many, but again, did someone try any with the Google Calendar? If yes, you can raise your hands. And did you plan your studies? Did you schedule your studies? Right. So in my last lecture, I explained how to plan, and also I shared some videos that how you could use, what you could use, how to get straight A's, right? And likewise, I gave you some uh, tactics, techniques, methods that you can use. Because remember, not always you will have this kind of a situation, right? The situation will be getting normal. So I know you are having issues. We do very well understand it. But remember, Buddha, that these situations will get normal. Now, what you have to think is, after 10 years' time, where you want to be, right? Now, yeah, so let me share my screen. Okay, can you see my screen? Okay, Buddha, thank you. Thank you for sending me messages. An update is going on. Okay, Samsung DX, okay. Now, just to ask you, do you know this individual? Who is this? Hmm? Who is this man? Who is this man? Hmm? Sitting over here in the middle. Who is that? Any idea? Yes, very good, Akila. Mr. Supun Veerasinghe, Dialogue CEO. See, he's sitting in a great office with his team. Right? So you can see him. So this he. This is Mr. Supun sitting in a plush office. Okay, let's go back. So he's also corporate leader. Right? He's been deemed as a corporate leader. You can see where he's sitting. He's sitting with foreigners representing Sri Lanka, winning accolades or accolades, right? Plush officers, right? What's special about this man? What's special? Very good, doctor. He is from our department. He is a graduate of us, right? So this is what I want to see you after 10 years, right? You won't be interns. This internship is only for a short time. So this is what I want to see you in 10 years time, right? I want to see you in this capacity, a great leader. Or at least, if you are not a great leader, to be a great human being, right? Who is successful. Success is not only material wealth, right? Success is what you achieve, what you expect, and what you achieve. Right? So therefore, try to, see that these are the Mr. Supun was sitting in lectures. Those days we were sitting in lectures, so now we are doing online. So he was sitting like you and was studying like you, a very ordinary person. But what made him different? What made him different is he had a vision. He had a vision. He knew always his circumstances he could change. Right? He changed the circumstances. He studied very well. He planned, he studied very well. Right? At that time also there was internship and all other things. The economy was not good even at that time. But again, he went forward. That's to have a vision. So what I would say is, if he can achieve this as an accountancy, right, one of our graduates, you're also doing the same accountancy course. So why not you? I don't expect you to be the next Dialog CEO, of course, but to be a great human being, to be a great leader, right? Not to be a mediocre performer where you will be doing a job that's not suitable for your qualification. You can be an entrepreneur, of course. We have great entrepreneurs in your batch as well as in your senior batch. There are great entrepreneurs, even now, right? One guy is exporting, right? You know, these green products, organic products to foreign countries. That's what some people in your batch, as well as in senior batch, what they are doing. Even at this, you know, even at this age, even not having the degree. What I suggest is complete the degree very successfully, right? Complete that. That should be your number one priority. And try to be people like this who have changed the world. But at least if you cannot change the world, change your family, change your village, change your town, right? Be someone there, not no one. You can. So you have come this far. Why not? Why not? You can. Why can't you achieve further? So Mr. Supun, who is from Dialog Asiata, is a CEO, right? The highest position over there. So this is one of us. So what I suggest is, why can't you be one of them, right? One of these great individuals. Now, these I'm showing only one example. There are several thousands of examples who are entrepreneurs, who are great leaders, who are great fathers, who are great mothers, right? Great human beings, right? So let me show you another person. I'm just going to Google and I'm just typing the names, right? Because I have several examples. Okay, who is this man? Who is this person over here? He's our very own son, Mr. Sanjay Bandar. Very good, I'm getting the answer. He's Sanjay Bandar, one of our own graduates who was in my senior batch. In fact, 2 years senior. And he's doing very well. He's the first ever president, right, from the accountancy degree, right, from the accountancy degree program of Yavardanapur, right. So he's a true son of our department. So these are examples that you can see who have achieved things in their lives. They had also, now Mr. Sanjay doesn't come from, Colombo 7. Of course, if you come from Colombo 7, very good. But I meant was he didn't have all kinds of, just listen to his life story. He's coming from a very ordinary family. He tells humbly that he had challenges in the first year, as we all have in English language. Now see where he is. So challenges are there. Challenges are there. But see now where he is. And go and see where his home. How luxurious and how his family is doing, how his children are doing. Right? Very successful. So that's what I'm telling. If these individuals can, these are all ordinary people like you. The only difference is these people had a vision. Right? These people had a vision and they were working for that graduate. This is not overnight success. Right? Success is an outcome of a process. People are thinking only about the outcome, not about the process. Right? So I was telling last time that about the process. Right? How many of you watched how to use Google Calendar or some kind of scheduling system, which I covered? Can you raise your hands? Anyone? No one? How many of you? So think about those things. Think about how to achieve greatness. Greatness is not a one-day event. You can be great, do something different than what you are doing. If you don't think about, yes, I do understand the economy is not good, the politicians are robbing, everything is correct, that's correct. Right? But these people, why they prosper? Amidst these trying circumstances at that time also, there were issues. Sri Lanka is a developing country, not a developed country. So therefore, you have certain things to think of. So think about the greatness you can achieve in your life and do the human contribution, immense contribution to your family, to your village, right? So you have a great strength. What you need to do is you have to look at that strength and use it. And gradually, don't go to quick, wealthy schemes. Right? There's no quick success formula. There's only one formula. That's hard and smart work. Always keep that great objective in your mind and go forward. That will make the real difference. Some people, they go for quick success, shortcuts. Those don't work. Shortcuts don't work. If you want to get healthy, there are ways that you can brew illicit liquor, you can sell drugs, you can be a politician, easiest way, and start robbing, right? So those are short-term schemes. They don't work. They are not lasting. They are not sustainable. In your accounting, you are taught sustainability. Now you are talking about corporate sustainability. But think about your sustainability. First of all, before you go to corporate sustainability. So some inspiring people I'm showing you, because we are in situations we are not, so it's the circumstances are not inspiring. But if you fixate your mind that you can and you can achieve despite whatever difficulty, you can, then these are the great examples who came from very normal families and achieved the best, highest in their lives. So they are true sons and daughters of Department of Accounting. Right? I get inspired by looking at these people, right? And that's what I wanted to share with you. Think very carefully and put your maximum effort Don't give up. Never give up. You're accountancy graduates. You're the very few who are fortunate to get into this degree program. Okay. You might think internship that this, yes, try to see how to be more effective, more productive. I taught you certain techniques. Go to YouTube and say, just see, YouTube එකට ගිහලා බලන්න. How to be more productive as a student. How to get straight A's as a student. There are enough videos. Enough videos. So if time permits, I will show you some. If not, you just go to YouTube and check. Don't waste your time. Don't waste a single minute of your time. Right. Okay. Right. So with that inspiration that I could impart at this juncture of time, where we are facing difficulties, we all are facing difficulties. So let me now come into the today's lesson. So great to see you all. So I see about 39 students. That's fine. I don't mind if it's even now one. Apart from me, if there's only one, I'll be teaching. So it's up to you. It's up to you whether you get inspired, you get directly involved in the lecture. And that's also, remember, part of the process. And also I uploaded all the pending videos. You can go and watch, and if there are difficulties, you can let me know, and we can see what could be done. Okay, so now what we'll do is we'll go to today's session. Actually, today I advanced the session, so I was planning to do this at the end, but Mr. Wajira, who wanted to do certain topics, is having a difficult time because of his office activities. There's an intentional review going on, IQR. So therefore, he has to attend to that. So therefore, I will be taking the lecture today, and maybe on 10th. 10th is a Sunday. So I'll confirm that with him again. He told that he's able to take it on 10th. 10th Sunday. Right, today is 6th. So 10th, we'll try to arrange an additional lecture for him, and then we can go on the normal lectures. So that's going to be the plan. So I have advanced discussing about the audit report. So we'll today discuss about the audit report, and then we'll be discussing the other topics that are relevant to the syllabus. Okay. So any questions? Do you have any questions? So we discussed in the last lectures about audit procedures. Any questions? So Akila, Kasun, are there any questions? Those are just names comes into my mind. All students, any student can ask me. We have Diniti Aptanayaka, Inushi and Dev, Pramoshi, like we have several students. Do you have any questions? Is it clear? Did you go through the notes? So in the last lectures, I taught you about the audit procedures. So week before last, I taught you about taking sales and account receivable. I taught you about how to audit them in and out, right? Completely. Then last week, I went through quickly, right, related to certain account balances and class of transactions. And I told you how to audit that, how to check that. And then I gave you notes as well as readings that will be important. So Puta, kindly go through them and read them and prepare for the exams. So today I got the new semester schedule, as it was named by the faculty. And so I think you know when the exams are going to be held, and probably it will be physical exams. So therefore it's not going to be online exams. So you have to prepare very well. So that's the one part of being successful, right? So you have to first complete the degree, not only complete the degree, try to complete it very good way. Because when I see the results, usually the results are not so good, right? In the third year, first semester, the results are quite, not so good when you compare to with your first year and second year results. In my past experience, that's what I see. So therefore, Buddha, what I recommend is try to do your best. Right. Again, you need to have a new set of skills, new set of mindset, new set kind of a mindset where you will be putting your maximum focus and you are doing where you are going to do your best, right? And so you have to sacrifice certain things like unnecessary sleep. Don't sacrifice your sleep. Sleep at least for 6 hours. Right? Don't compromise that. Right? Then you might need to compromise Facebook, unnecessary Facebook watching, or WhatsApp, or whatever other thing that you're watching. So an unnecessary gossip, unnecessary watching news. So limit that. As students, your main focus should be not those. Your main focus should be studies and the internship, as well as maintaining a good healthy life. Right? Nutrition, what you eat, make sure that you eat at least some good food. And because if you don't get good food, good nutrition, it will impact your memory, it will impact your body and in a negative manner. So make sure that you get a nutritious diet. Sometimes you might say it's very expensive. No, it's not. See how to, again, go to the internet and check how to have a nutritious diet, a balanced diet at low cost, right? Rather than you paying money or giving money to certain places, eating houses, which actually cook and produce unhealthy food. Maybe it's time that you prepare your own food. And preparation of your own food is not a big deal if you know how to do that. So again, YouTube is your friend. As Google is your friend, YouTube is your friend. There is low cost nutritious diet that you can prepare within very short periods. So try to see those kind of mechanisms. If you think it's possible. Okay. So let me now come into today's main topic. That's the audit report. So any questions? So it seems there's no questions. So let's go into today's topic. So that's the audit report. And that's the main idea. That's the main topic that we are going to discuss. Within that, we are going to discuss three auditing standards. So it's going to be a quite lengthy session. Okay. Okay. So let me put this into the slide mode. Okay. So we are going to discuss today a very important area that's about the audit reporting. Right. Now you have done the audit. You planned the audit, you performed the audit procedures, you have gathered the audit evidence, evaluated them, and using now your professional judgment, now what you are trying to do? You are trying to now give that, right? Communicate that. Communicate your opinion. Again, this is not a fact that you are communicating. You are communicating the opinion. So you can see there are three standards mainly involved. That there are reporting the other reporting standards, but these are the main reporting standards. That's really important. These are the main four, I would say. So you can see the first one is ISA 700 revised. Yes, we have the revised updated standard. Then ISA 701. So now ISA 700 revised is the audit report. It's about directly about the audit report. Then ISA 701, which is about key audit matters. Right? I'll tell what are key audit matters and we'll discuss. Then we have also ISA 705 and 706. Right? We'll be discussing about those things as well. Okay. So here these are of expressing a modified opinion, what kind of modifications you are going to do into the standard audit report, which is proposed under ISA 700. And also, we'll be discussing about what do we mean by this other emphasis of meta paragraph as well as other meta paragraphs. What are those information? So we'll be discussing these things. Okay, we are going to discuss these things and we are going to enlighten ourselves. So it's going to be very important. One, because this is the outcome of the entire audit process. Now, if I ask you, what's the outcome of your degree? In terms of a document, do you get something? What's that? The outcome is of the degree is a resourceful graduate. right? Who can be like Mr. Supun Veerasinghe or Mr. Sanjay Bandar or any other individual who has achieved their objectives. Now, what's the in documentary form? What's the outcome of your degree? Indeed, the degree certificate. Thank you, Buddha. Yes, I'm getting the correct answer. It's a degree certificate. The outcome of the degree is the degree certificate. That's correct. Now, outcome of an audit is the audit report. So that's very important because now you might have planned, you might have performed the audit procedures, evaluated that, and finally, then you have to come also and you have to express the audit opinion. So we are going to discuss about that. So let's go into that directly. So we'll start with ISA 700 revised about audit report. So you can see here International Standard on Auditing, or you can call it SLAUS, Sri Lanka Auditing Standard 700, right? Same thing, revised. Now it says here forming. So this is the standard, right? So let me take point options. Okay, forming an opinion. So the standard directly talks about forming an opinion and reporting. So this is the main standard on audit report. So it has a standard audit report as well. So I'll be explaining that what are the contents. So about the opinion as well as the standard report. So let's go into the standard. So that's what it says. Now, as auditors, you will have to, as external auditors or financial statement auditors or as statutory auditors, you have to see whether the financial statements are prepared and presented in accordance with the applicable financial reporting framework. So you have to tell them. So in Sri Lanka, we have the SLFRSS and LKSS as the reporting framework. So what we do is we see whether the financial statements are prepared and presented in all material aspects based on those standards, accounting standards. So if the financial statements are prepared based on the standards, accounting standards, in that case, we can say we can provide an opinion, we can express an opinion that the financial statements are okay, true and fair. So likewise, so that's the main idea. That's the main idea of an audit report. So you express whether the financial statements are fine, right? So that's what you do. Give me a moment. So I'm trying to see whether I can, yeah, okay, that's good. Okay, so that's what you do and that's what your main intention is, right? To express an opinion. Now, for that, you provide an audit report, right? After you do the audit, you are going to provide an audit report to whom? You provide the audit report to whom? How can you know? To whom are you going to provide? කාටද මේ audit report එක දෙන්නේ? Audit එක කරා, you did the audit and now you are going to provide the audit report. To whom are you going to give that? Yes, some people are saying different terms. Okay, Akila says audit committee, Shehani says client. It all depends on the engagement letter. In the engagement letter, that's a contract between the auditor and the client. It will mention to whom the audit report will be addressed. That's where it is. It might be the board of directors, it might be the shareholders, it might be anyone. It has to be mentioned though. It cannot be the management, right? The very management, because the audit, now to be an auditor and audit, it has to, you have to have three parties, right? So likewise, you could see. Okay, so you can see the title. Now let's see what are the contents of an audit report. What are the contents of an audit report? So now we are discussing the outcome. Like in your degree certificate, now it's like, after a 4-year process, you're going to get the degree certificate. Now, after lengthy procedures, right, performance procedures, you are going to have this audit report. Now, in this audit report, now let's discuss what are the standard comments or standard elements. Right? What are the standard elements? Number one, you will see there should be a title. There should be a title. Now, the title should clearly indicate, right, that the report is of an independent auditor. So it will say independent auditor's report. Right? Let me show you the standard audit report, so you'll see that. It's also there uploaded in the LMS. So this is the standard audit report. So you can see It says independent auditors report. This is the title, independent auditors report. Now my question is this: why do you need to say independent auditors report? You could have just told auditors report. ඇයි අපි independent කියන කැලේ දානවා? Why do we need to insert? Why need we to put independent? The term independent into the title. Any idea? ඇයි අපි independent කියලා දාන්නේ? Why do you think? We could have just put, now this audit report, we could have just mentioned as auditor's report. Okay, yeah, thank you, Akila. What else? Why do you think we need to say independent auditor's report? You could have just told auditor's report. Why is that? Yeah, that's okay. Yes, Kasun, thank you. It's like this. Now, where do you include this audit report? In an annual report, right? In an annual report of a company, you are going to include the auditor's report. There might be other reports as well from some other auditors. Maybe the internal auditor might have given an audit report, and it also might be contained in the annual report. Annual report එක auditors like reports තියෙන පුළුවන්. In an annual report there can be different auditors reports, right? There can be the internal auditors report. Now to distinguish those reports with this report, right, with the independent auditor's report, which is quite very different from those, you have to tell independent auditor's report. That's the reason, right? So each word, right, each word has a meaning, right? Why do you need to put that? And so therefore understand, then you will understand the context. So that's the title. Then you will have the addressee. Now to whom it will be addressed? Again, as I told you already, addressee is to whom you are going to know. This is like a formal letter. The audit report is like a formal letter. In a formal letter, an official letter also, you have a title and you have an addressee, right? Likewise, you have an addressee. Addressee is now in a letter, an official letter, you have to address it to someone. In any letter, you have to address that. But these also like that. Addressee. Again, this will depend on, right, what's mentioned as the addressee, right, in the engagement letter, audit engagement letter, that at the beginning of the audit, you have to sign an engagement letter. So there, the addressee should be mentioned. It could be the shareholders, it could be the board of directors, it could be anyone, right? So likewise, but again, it has to be mentioned very clearly. So addressee. The auditor's report shall be addressed as appropriate based on the circumstance of the audit engagement. So please take down there, based on the what? Audit engagement letter. In the audit engagement letter, it will very well say, right, engagement letter is the contract that you sign at the beginning of an audit, where it's exchanged between the auditor and the client. In that engagement letter, it will mention who is going to be the addressee. Very clearly, it has to be there. So that's addressee. Clear? Okay. So let's go to the standard audit report that I showed you. Now you see here the standard audit report. In the appendix to this particular standard, they have the, and you can see the address is to the shareholders of ABC company. Right? Likewise, it's addressed. So this is the second element. Right? And now let's go to the third element. And now you can see the auditor's opinion is there. The auditor's opinion section. So you can see, if you go to here, you can see the opinion section is there. Now you can see opinion section. Then after that, we have the basis of opinion section. What's the opinion section? But before giving the opinion is given in the second paragraph of the opinion section, right? Before giving that, we have to give some information. So what's that information? You cannot just directly give the opinion. In the opinion section, that subtopic of your audit report, you need to have some information given. You need to give some information there. What's that? That's this. The first section, so that's the first section, first para of the audit report shall include the auditor's opinion and shall give the heading opinion, right? That's there. So the section, right? The first section should currently contain what? The first paragraph, I would say, should identify the entity, right? Either a number, you have to tell what's the name of the entity before giving the opinion in the opinion section. First thing is that you have to tell the entity's name of the entity. And then it will have to tell that they have been audited. The audit has been carried out. The financial statements have been audited. Then also, very clearly, it will have to tell the title of the financial statements that's being audited. Now we know that we have 5 elements of financial statements, right? Or 5, I would say, financial statements. What are those? The income statement is there. The statement of financial position is there. The cash flow statement is there, right? Then what? The changes of equity statement is there. Then also we have the notes, the accounting policy and notes to the financial statement. So you have to categorically tell what financial statements you audited, including the periods covered, right? Now that's the title of each statements, including the notes and the accounting policies and the dates or periods covered by. So these things you have to tell under the opinion section, under the first paragraph. Now let's go to the standard audit report, right? It says what? You see, we have audited the financial statements of ABC company. Can you see that? Very clearly the company's name has to be mentioned. It comprises of the statement of financial position. Yes, that's the first statement that they have audited. And then it's the first statement identified in this report. Then the date is given, the period is there, and the statement of comprehensive income, statement of changes of equity, and statement of cash flows for the then ended. Okay, you identified the then ended, and note to the financial statements, including a summary of significant accounting policies. So see, all the requirements are covered, right? All the requirements are covered. So this is the first paragraph of the opinion section, right? Then you have to tell the opinion, right? Then you have to very clearly indicate what's the opinion as the audit. What's your opinion? So here, let's see. Here it says, okay, let's go to the next one. So let's see how to give an unmodified opinion. Now in this standard, you get the unmodified opinion. Then 705, you get the modified opinion. So see, the opinion can be expressed in 2 ways, right? So you see, this is also correct. This is also correct. Now let's see. Now you can say, now these are samples. In our opinion, the accompanying financial statements are presented fairly in all material respects. That's one way you can express that the financial statements are okay. Let me take a video. Present fairly in all material respects. The financial statements are presented fairly in all material respects. Or you can say the same thing. In our opinion, the accompanying financial statements give a true and fair view. Not a true and correct view. It says a true and fair view. Because you cannot give an absolute guarantee that the financial statements are correct due to 5 limitations, right? That entail an assurance engagement. So you say it's a true and fair. The financial statements are true and fair. Now what's correct out of these 2? Mukadda hari එක. Present fairly on material aspects. If the financial statements are okay, meaning that they are prepared in accordance with the applicable financial reporting framework, prepared and presented. Then you can say present fairly in all material aspects. Or you could say true and fair. What's correct? Mukadda hari. Very good. Yes, Akila. Both are correct. Both are okay. But in Sri Lanka, what's most popular? Present fairly in all material aspects skill opinion එක දෙන එකද නැත්නම් true and fair කියන එක? What's more popular? True and fair. Very good. True and fair. Right? That's what we see all the time. But both are fine in certain audit opinions. You might see, it might say true and fair. It might say present fairly in all material respects. Both are allowed in this audit standard. Both are correct. So let's go to our standard audit report. So they are saying, in our opinion, now this is the sample, the sample given in the standard as an appendix. In our opinion, the accompanying financial statements present fairly in all material respects. Or you could say the same thing, or give a true and fair view of the financial portion of the company as at, again, you name the date, and of its financial performance and its cash flows for the year then ended in accordance with the International Financial Reporting Standards. So here they have taken the International Financial Reporting Standard as the applicable financial reporting framework. So in US, what's the applicable financial reporting framework? IFRS. US in US, what's the applicable financial reporting framework? Very good. US GAAP. Indeed. Indeed, US GAAP. Very good document. Right? It's a US GAAP. In Sri Lanka, what framework? In Sri Lanka, what's the framework? Yes, SLFRSS and LKSS, isn't it? SLFRSS and LKSS. That's correct. So you can see, yes, thank you, Kasun as well as Akila. So I see 2 students responding, right? Thank you. So that is important. So as students who are really engaged in the lecture, right? I told you that if you really want to engage in the lecture, right, just don't listen while you are sleeping, while you are eating, while you are doing something else. The best practice is take a piece of paper, stack of papers ideal, and just write down some notes and respond, type and send. So that's called active participation. Also, when you read, actively read. Don't just read, right? It's not going to be any benefit. Then what's active reading? How to engage as active readers? Go to YouTube again. Just type active reading as a student. It will tell how to actively read, right? So that's important. So this is about opinion. So in the audit report, this is the opinion. Opinion is the most important part, right? Most important part, right? Good. Any questions so far? So we discussed 3 important elements so far of the audit report. What was the first one? What was the first one we discussed? What's the first important element? The title. Then the address. And now we are discussing about the opinion. Let's see. Title, addressee, and the audit opinion. And before coming to directly the opinion, you have to identify the financials as well as the entity, as well as the periods. And then you express as the second paragraph of the audit opinion, right? Section, you have to explain, you have to give, you have to express the opinion. And that's the most important part. That's now as a doctor expresses the opinion of a patient. If you go to a doctor, the doctor will check you and give an opinion. Likewise, the auditors will check the financials and give an opinion, right? That's what they do. Then number 4. Number 4, the main 4th element in an audit report is the basis for opinion, right? Now, they have to tell on what basis they gave this opinion, what they did, and what's the basis, right? What was the basis? The opinion should be based on something. So that's what first thing they will say, states that the audit was conducted in accordance with the international standards on audit. Right? First thing is that you have provided this audit opinion based on the audit carried out based on ISAs. Or you can say in Sri Lanka, same thing, Sri Lanka auditing standards, SLASs. So you have to start with that. You have to very clearly indicate that. Then 2, refers to the section of the auditor's report that describes the auditor's responsibilities. So then we have to refer to the section where it describes the auditor's responsibilities. Now we know the auditor has a main responsibility to carry out the audit in accordance with ISAs and then express the opinion, right? So it's giving a reasonable assurance. And also includes the statement that the auditor is independent of the entity. And also they have followed the what? Code of ethics. Being independent, and also you are being ethical. That's important. And then the auditor also will have to tell on the basis of opinion, states whether the auditor believes that the audit evidence the auditor has obtained is sufficient and appropriate. I told those two things are the quality and quantity. So you can remember, believes that the audit evidence the auditor has obtained is sufficient and appropriate to provide basis for the audit topic. Right. So you can see these are the requirements of basis of opinion. Right. So you have to tell these things, and you have to tell very well that you have to clarify these things, and you have to indicate to the reader that the opinion is based on, right, these four important information. Right? This clarification. So now let's go to the opinion. Now see, we conducted our audit in accordance with international standards on auditing or Sri Lanka auditing standards. Our responsibilities under the standards are further described in the auditor's responsibility for the audit report of the financial statement section of our report. So down you will see that the auditor's responsibility should be here. Responsibility of the management is there, and then the auditor's responsibilities are there of the financial statement. So you have to give reference to this section and tell that yes, auditor's responsibilities are this. Because based on that responsibility, they should have fulfilled that and they should come up with the opinion. Nothing else. Right? So auditor's responsibilities. Section of our audit report. We are independent of the company. So very clearly you say that you are independent auditors and you are independent in accordance with the International Ethics Standard Board for Accountants, Code of Ethics for Professional Accountants, because those that ethical conduct which I taught you, right? I shared a video with you, right, which explained the entire ethical requirement, right, which will say that the auditor will have to be ethical. Together with the ethical requirements that are relevant in our audit of the financial statements, and we have fulfilled our other ethical responsibilities under the ISBA code. So very clearly you have to tell that. We believe that, and then you add this statement, which I told you earlier, this is the last statement you have to give. We believe that the audit evidence we have obtained is sufficient and appropriate to provide the basis for our opinion. So this opinion is based on what? Sufficient and appropriate audit evidence. So you have to indicate those things under the basis of opinion. You give the opinion and you tell the basis of that opinion. How you came up with that opinion. Is that clear? Any questions? So if something is not clear, please send me a message. I'll be very happy to explain it again. Or at least if it is clear, you can say it's clear, sir, thank you. Or you can say clear, at least if you don't want to say thank you. Is it clear? Because these are going to be very important in your examination. You will have to understand the standard audit report. And also you have to understand the deviation from the standard audit report, qualifications, modifications, what are those? You have to understand those. And also, you will be given scenarios in the exam, short scenarios. And you'll be asked to say what kind of opinion is required in this scenario. It's going to be important. Okay. Okay, I got some comments. Thank you. At least 3 people are saying so. It's clear. Thank you. Oh, it's 4 people. So I would like to see more engagement. That's what I'm trying to. I'm not going to tell any names. And, I don't want, because doing a lecture is like meditation. But you cannot meditate by blaming, scolding, and doing different things. So I'm not going to do that. I'm not going to. So it's your responsibility. You are adult students. So if you want to just log in and do all other things in that's up to you. But you are not cheating me. You are cheating yourself. So I'm not going to ask anything. It's totally up to you. And I believe in Sri Lanka that only now, see, you are coming from different areas. I believe in Sri Lanka you have electricity in certain areas. I do understand, but seems only 34 people have got electricity access. Right? I don't think it's correct. Right? It's a misrepresentation. But maybe some students are thinking about data. Once they think that once it's uploaded, you can download using the data, or actually at least you can watch it by YouTube. I don't think it is a good idea. Taking part in the lecture and understanding that asking questions, actively engaging is going to be really important. But if unable, completely up to you. No worries. Just watch the video and try to understand and apply that. What matters finally that you get right the idea, you understand the idea, and you could apply that at the exam. So it's completely up to you, right? So thank you for that. I have got several responses, really appreciated. Ah, yes, Kasun has a small question. Thank you, Buddha. Others have told, okay, yes, Kasun, let's see what's Kasun question. So is opinion section, we should mention if it's a consolidated one. Yes, of course, Buddha. We have to now actually the opinion, if it is consolidated financial statements, you have to tell consolidated financial statements. If it is standalone, you will just say financial statements. If it is consolidated, then you have to tell it's consolidated financial statements, right? For the holding company. So likewise, you have to distinguish that. If not, it will create a problem. Or if both financials, then you have to identify that as well. So we'll see an example. We'll see JKH financial statements. Good question, Putra. Thank you very much. And yes, I have got several claims. Really appreciated several feedback. Good. So it's completely up to you. These are university. These not. I'm a lecturer. I'm not. I'm not going to police, or I'm not going to check. It's completely up to you. So it's free world, isn't it? Yeah, we do have need to have internal controls and every other things, but again, we cannot implement that under the circumstances. Right? If you all have internet connection, if you have electricity, all have electricity and all these things, we could implement different internal controls and see whether you are really studying. But the acid test is what? Exam. At the exam, whether you can perform. So whether you have come to the lectures or not, if you can perform, that's it. Right? Okay. Right. Then let's go back to the components. So this is the fourth component of a standard audit report. Then we shall come to the going concern, the fifth one. Where applicable, now it says where applicable, the auditor shall report on in accordance with ISA 570 revised. Actually, that was the standard that was Vajra sir wanted to discuss with you, but unfortunately he was unable to do it today. So that's what I'm taking the lecture today. I didn't want to cancel the lecture. It's not our policy. We are going to take things in advance. So he will teach you what's going concern 570, what are the indications, red flags, and those things. So if there's a going concern issue, you can apply that. You can indicate that, right? Going concern issue. It's really important. Then comes, so we are applicable. Right? Then key audit matters. So here I'll have, these are matters that are really important matters, and I will discuss under the next standard, which I'm going to do today. What are these key audit matters? So these are important matters for the significant matters. Significant matters. These are not qualifications. These are not things that impact the audit opinion. These are not things that the auditor is trying to emphasize. These are things that are significant. When you do the audit, you might have come across significant matters, right? Sometimes you might come across significant estimates, right? When you audit, you might have come across significant estimates. Maybe those estimates are based on management's assumptions, right? So nothing wrong in them, but the auditor had faced such kind of significant estimates during the audit. The auditor would highlight that. The auditor would highlight that, such kind of things. So these kind of matters we'll discuss with examples in the next standard 701, which I'll be discussing today itself. So you can see that these things also you could add. You could, you could add in the key audit matters section. So we'll see what are the key audit matters in 701. So here now the audit reports are getting lengthy these days because of this. Earlier, about 10 years back, the audit reports did not have this. The audit reports were just giving the opinion, that's all. But now the audit reports are more informative. They tell about the key audit matters, right? What were the significant matters the auditor had come across when performing the audit. Then any other information, right? So they are actually applicable. The auditor shall report in accordance with ISA 720, revise the auditor's responsibilities relating to other information. The other information is non-financial statement information. In an annual report, you might have other information contained, right? Now, if you look at the annual report, there is a section for financial statements. In addition, you have other information, the director's report, the chairman's report, the corporate governance information. Those are all in addition to the financial statements. So if you want to report something related to that, maybe there's a significant inconsistency, right? In that case, you might need to report that. So you can include that in under other information, right? Then comes a very, very important component when it comes to financial audit, a financial statement audit. The auditor's report, you have to indicate this is a must. All the earlier ones, like not all, but some of the earlier ones, like other information, they are applicable, right? Then key audit matters, now you add that, right? That's also very applicable. If it is there, you did not come across a key audit matter, then you don't need to include. But going concern is also very applicable. But here now, this one, responsibilities for the financial statements is a must. The external auditor will have to report this. There is no option, right? Let's see what's there. So here, now who is responsible for the financial statements? Is it the auditor or the management or someone else, the shareholders? Who is responsible? Simple question. Yes, very good. I'm getting the response. You are actively engaged in the audit, in the audit as well as the lecture. Very good. Yes, the management. Excellent. I'm getting correct answers. It's the management who is responsible. But let's see an arrangement like this. Now let's say now in a particular company, there's no accounting division, and the financial statements were outsourced, preparation were outsourced. They gave it to ABC company, which is an audit firm, right? PQR companies, there's no accounting division. So PQR company gave that to ABC chartered accountants. They prepared the financial statements and gave it back to ABC, a PQR company. Now my question is, who is responsible for the financial statements? Is it PQR or ABC chartered accountants? Who is responsible? Now PQR company, PQR PLC, they don't have an accounting department. Let's say, very unlikely, but they don't have. So they delegated that, they gave it, that outsourced that to ABC chartered accountants. So ABC chartered accountant prepared the financial statement and gave it to ABC. Now my question is, who is responsible for those financial statements? Is it PQR company PLC or ABC chartered accountants? Who is responsible? Yes, thank you, thank you. You might make mistakes. I got mostly the correct answer. Okay, PQR. Company is responsible. Remember this very well. You can delegate things, but you cannot delegate the responsibility. Right? That you have to remember. You can delegate things to people, but finally, if something goes wrong, you have to get the responsibility. Now, say for an example, the prepared financial statements have a massive error, right? Maybe ABC did, the chartered accountants did the financial statement, they prepare the financial statements and they give that to the PQR management. PQR give that to the shareholders, the financial statements. There was a massive error. Now, at the shareholders meeting, annual general meeting, the shareholders stand and ask PQR management, the directors, there's a massive error, why is that? Then can PQR say, look here, it was prepared by ABC, so ask them, you can tell it? No. They have to take the responsibility. That's what we say. You can delegate things, but you cannot delegate the responsibility. Right? People's leaders should understand that. True leaders should understand that. Now, in certain countries, when there are massive issues, the leader says, those problems are not created by me. Right? So I'm not responsible. Can you tell them? So he will tell, no, my cabinet, some of my ministers are responsible. No, those were not created by me. Can you tell that? No, you can't tell that. If you are a true leader, you cannot tell that. Because finally, you have to take the responsibility. Because you are the leader. You cannot tell me, nirmane karo prashna hoye කියලා කියන්න බෑ. ඔබතුමා නිර්මාණය නොකරත් ඔබතුමා ඒක responsible. Although you might not have created it, you are responsible. You cannot tell I'm not responsible because it's your cabinet. It's your government. Right? So therefore, remember that if you are a true leader, you cannot evade responsibility. You have to take the responsibility and you have to tell, yes, I'm sorry. I have made a massive mistake. Therefore, remember, you can delegate things, but not the responsibility. Right? So here very clearly, the example says, even if you gave it if you outsource that to a different party, finally you have to take the responsibility. You are the management of the company is always responsible for the financial statement, whether outsourced or not. Keep that in mind. So that's what it says. Responsibility of financial statements. So very clearly say preparing the financial statements in accordance with the applicable financial reporting framework, SLFRSs and LKSs, and also following the internal controls that are applicable is of the responsibility of the management. Right. So very clearly it says two things. One, preparing and presenting the financial statements in accordance with the IFRSs. Right. In Sri Lanka, SLFRSs and LKSs. The responsibility of management. And also, the management is responsible to have proper internal controls, right? That will lead to proper financial statements without material misstatements due to fraud or error, right? That's the responsibility. So not only preparation and presentation of financial statements, they have a responsibility also to maintain proper internal controls on those financial statements, at least on those financial statements. Right. So the financial statements are free from material misstatements due to fraud or an error. So that's the first responsibility, right? It's a dual responsibility. You have the preparation part, presentation part. That's the first one. Then the second one, to have proper internal controls. Then number two, they also need to assess the entity's ability to as a going concern. So they will have to assess whether the entity can be a going concern. Right? That assessment, the management will have to do. The auditors will have to, of course, check whether that assessment is okay. But it's not the auditor's responsibility to assess whether the entity is a going concern. Right? The management will have to assess, then the auditor will have to check whether that assessment is okay. Right? And then tell whether it's not going concern, or if there are issues, you have to tell them. So that's the auditor's responsibility, the management's responsibility. Then now under 9, auditor's responsibilities. Auditor's responsibility. So for what the auditor is responsible? That's the second part. Right? The second important there in terms of responsibility. Now we discussed about the management's responsibility, right? So in fact, overall, there are 3 responsibilities when it comes to management: on the financial statements, then on the internal controls, that are related to the financial statements. Third, about assessment of going concern. Then now let's come into the auditor's responsibilities for the financial statements. Right, it's very clear. Right, the objectives of financial statement audit explain that all. I can remember. When it comes to objectives of a financial statement, what was the auditing standard we discussed about the objectives of the financial statement? What was it? One standard again discussed correct. In which standard did we discuss? Auditors' objectives, right? What are the dual objectives, right? When it comes to financial statement audit, what ISA, OSLA, US did we discuss? In which you get that? Okay, they discuss correct. In which we discussed? My God, Audit කියන්නේ. Why are you distracted? Yeah, very good. ISA 200. I'm getting the answer. ISA 200. ISA 200. That's correct. I think you can remember the same wording is here. State the objectives of the auditor are to what? Obtain a reasonable assurance, and then based on that, provide an audit report. So yes, the auditors will have to remind the client, as well as whoever is going to read this report. These are our responsibilities. And also you have to remind them that state that the reasonable assurance is a high level of assurance, but it's not a guarantee. It's not an absolute assurance. Already we know there are 5 reasons why an auditor, a financial statement auditor, cannot provide absolute assurance. There are 5 reasons for that. We discussed that under what on the first lecture, audit engagement, right? Assurance engagement. And so there might be a possibility, there might be material misstatement could be there. Right? They state that the misstatements can arise from fraud or error. So it can be either due to fraud or error. And again, Vajra taught you that the difference between what's fraud and error, intention, right? So, yeah. So likewise, you'll have to very clearly identify. And also, the auditors responsible for the audit of financial statement section of the audit report shall further elaborate. These are some important information that further should be there. The auditor exercise professional judgment. So auditors use their judgment, but again it's professional judgment as well as professional skepticism. We all discussed these things in ISA 200. So again, these are and also describes an audit by stating that the auditor's responsibilities are. Then you will ideally discuss what's an audit, an external audit, right? So these are now, right, auditor's responsibilities in conducting an audit. What are these? First, we know under ISA 315, you have to do risk assessment procedures, right? Then also to understand the internal controls when you do an audit. Then you are going to evaluate the appropriateness of accounting policies and those things. Then appropriate or management use of the going concern basis. And then when financial statement are presented in accordance with the fair presentation framework. So you have to explain these things, that what you did under the audit, an external audit. So these things you have to include, right? So a massive amount of information we have to tell related to the auditor's responsibilities. Now the question comes now, where you should present some of this information. Now, if you are going to put all this information, right, sometimes the audit report will be bulky. We have to present this information, that's correct. The auditor's responsibilities, the management responsibilities, that's correct. But on the other hand, the new audit report standard 700 revised, always I say new, it was enforced in after 2016. So it tells a very important thing. Now it says location Now see, location of the description of the auditor's responsibilities. Right, I told it you have to include certain information as the auditor's responsibilities. Now, where could you include this? Now, this audit standard provides, of course, you can include in the body of the audit report. As a part of the audit report, you can include the auditor's responsibilities. Or what you could do is, if you think it's too lengthy, you can put it in an appendix to the auditor's report. On the other hand, the standard also allows the third place in a website, right? In a website, you can put that, the auditor's responsibilities. By a specific reference to auditor's report to the location, such as a description on a website of an appropriate authority where the law, regulation or national, but it has to be allowed by the national regulators in Sri Lanka, CS Sri Lanka, right? If it is permitted to do so. So maybe you can you can put this standard, now you can give that reference to a website, right? Of an appropriate authority. You cannot just put to, maybe you put a post in gossiplanka.com and then you put that auditor's responsibilities are this. And in your audit report, you cannot just say, go and look at that website. It has to be a website, what? Of an appropriate authority. In Sri Lanka, it's CS Sri Lanka, or some other regulator which is overlooking this. So that's also okay. You can put that in these locations. So let's now go and see the standard audit report, what has happened. Now, first of all, here I'll tell you what key audit matters. You can include key audit matters, right? Then other information if applicable. Then responsibilities of the management. Very clearly, we told that there are 3 key responsibilities on the fair presentation of the financial statements and on the internal controls of the management. And also that, yes, when preparing the financial statements, the management should have assessed whether it's a going concern. So these are the 3 key responsibilities, that's correct, of the management. Then when it comes to the key responsibilities of the auditors, the financial statement auditors, now see, here you can see, these information should be included, right? Should be included within the audit report. What are those? Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatements, whether due to fraud or error, and issue an auditor's report that includes our opinion. So that's what was told under ISA 200. Then it says reasonable assurance is a high level of assurance, but it's not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement, because we do on sample basis, and there are other 4 reasons. Misstatements can arise from fraud or error and are considered material if individually or in aggregate they could reasonably be expected to influence the economic decision. So it's the definition of material. But on the other hand, you can see it says very clearly, part 441B of the ISA explained that the shaded material below can be elaborated in the appendix. Right now, as I told you, now the material that I'm going to now tell you can be inserted as an appendix to this audit report, or you can leave it if you want as a part of the audit report in the face of the audit report, or as an appendix to the audit report, or in a website of the appropriate regulator, not in gossiplanka.com, right? So what information? Here, as a part of an audit in accordance with ISS, we exercise professional judgment and maintain professional skepticism throughout the audit. So you could include that within the body of the audit report as they have done here, or you can put this as an appendix to the audit report, right, just after the audit report is signed off, or you can take it to a website if allowed. Identify and assess the risk of the material misstatements of financial statements, whether due to the fraud. So this is what it says we do under audit, right? Risk of material misstatement we'll be looking at. Right? Then second one, to obtain understanding of internal control. Right? Then evaluate the appropriate accounting policies. and conclude the appropriate management use of going concern. With these things, the shaded material you can include on those three places. You can leave it as it is, and a lot of information, because again and again in every audit you are going to tell this. So it lengthens the audit report. That's why they have given the chance to put it as an appendix to the same report here itself, or you can take it to a website if allowed, a website of an appropriate authority, CS Sri Lanka, hopefully, if allowed. So it says, okay, then other things that you do under an audit. So you can see a lot of things are there, and how you conduct an audit and what's done under audit. So you could take this, you can leave it as it is if you want, or you could take that to the appendix of this report in the annual report itself as the audit part of the audit report. You can just give it as an appendix to the audit report, or you can take that, you can take this information to a website of a regulator, appropriate regulator. But remember, only the shaded material. But these funds, you cannot take it anywhere. This you should put that on this face of the audit report, right? Up to saying that what, so basically that what are the objectives, and that the audit provides a reasonable assurance, right? And there could be the possibility of having misstatements that could be material, either due to fraud or error. Those information should be there, but the additional information that I told you, right, could be placed within the audit report as an appendix to the audit report, same audit report, or you can take it to a website. So that element was not there earlier. So that's what you talk about the place. So this ABC, right, this ABC over here, right, element number 9, ABC, no option, you have to state that on the face of the audit report, external audit report. But then these things, right, that, you know, related to the auditor's exercise of your judgment and the other information you could put in as an appendix. You can leave it as the base, of course, or you can put it as an appendix, or you can take it to a website of an appropriate regulator. Very good. Kasun says, Sir, KPMG use Sri Lanka Accounting Auditing Standards, committee, accounting audit website, auditor's responsibility page. Very good, Kasun. So you can see already they are using the Sri Lanka Accounting Auditing Standards Committee. That's also functioning under CS Sri Lanka. So you can see they are giving the reference for that particular page link, auditor's responsibility page. Thank you, Buddha. At KPMG, they do. Right. Then when it comes to auditor's report, now these are the other information. Not other information, the information, the other elements included in a standard audit report. Other reporting responsibilities. So report on other legal and regulatory requirements. Now, if you are a company in Sri Lanka, you have to comply with, right, 2007 number 7 Companies Act. So under other responsibilities, under the Companies Act, there are certain requirements that the companies will have to comply and report. So you might need to include those information here, like maintaining appropriate books of accounts, right? And they are in accordance with the financial statements are in accordance with that. Likewise, there are certain reporting requirements. If you are a bank, the Banking Act is important. So you'll be putting that under other reporting responsibilities. If you are an insurance company, right, then you might need to put the provisions of Insurance Act in terms of reporting over here. Likewise, it will be there. Right? It's based on some specific entities, right? And the legal responsibilities will be based on that. Then name of the engagement partner. After that, you have to put the name of the engagement partner. Now again, before 2016, it was not there. Now you have to identify the engagement partner. Right? But it says, unless in rare circumstances, such disclosure is reasonably expected to lead to a significant personal security threat. Now, usually in an audit report, you have to tell who was the engagement partner. Right? Engagement partner means who was in charge of the audit, the partner in charge. In an audit firm, there might be 10 or 15 audit partners in a large one. And each audit might have been done by a person, an engagement partner. So that partner's name will have to be explained, or we have to disclose. Earlier, what usually people do is they sign using the audit firm's name. But now we have to indicate who did the audit. Who did the audit? But on the other hand, they give an excuse. This audit reporting, right? The audit report says that if it poses a significant threat, then in that case, you don't need to disclose the name, right? Now, particularly in certain countries where you have frauds everywhere, starting from the top to bottom, and if an auditor discloses that, what will happen to the auditor? The auditor will be, right, some color of bands might come and take that person away. And that might be the auditor's end. So auditors are humans, no? They have families, they have wives, kids, children, responsibilities, parents, relatives they have. So they would also like to leave. So knowing that the standard allows not, if there's a significant personal threat, right, not to disclose the names of the engagement partner. Right? Then signature of the auditor. Right? So the auditor can place the signature, but usually I see is the auditors will have a specific signature where they will write the audit firm's name as the signature. Right? So EY, Ernst & Young, they will write it in a specific way. It's again, they will write Ernst & Young. Right? Auditor's signature. Then auditor's address. No, I told that now this is quite similar to an official letter, but these are different. In an official letter, you are going to put the auditor's address at the beginning, right? But here you are putting at the end. And you are also in an official letter, you are going to put the date of the auditor's report, or not the auditor's report, the official letter at the beginning. But here you are going to put that at the end. So that's the convention. So the signature, auditor's address, and date of the audit report. Because why you don't put those things? Because there are more important things. That's the auditor's report, the auditor's opinion. Right? After the title, after the addressee, you are going to put directly the auditor's opinion, not this information. Right? So they have taken this to the end. So these are the contents, elements of a standard audit report. Right? So let's go to the standard audit report. You will see this. And then report on other legal and regulatory requirements. So it might be company act requirements or whatever. Yeah, then you have the engagement partner's name, signature, auditor's address, and date. So shall we now go to JKH financial statements and see what they have got there? Let's see, shall we see the JKH financial statements? Right, let me see. Let's go to JKH. JKH. I'm checking. I already downloaded it sometimes back. Yeah, it's there. 2021. Okay. Okay. So these JK financial statements, John Kills Holding. So Kasun also asked. So if you are going to give audit report for a holding company, for a consolidated financial statements, how to do that, it will be there. So you can see that. So yes, let's go. So these are the usual things they put in an annual report, and you can see a lot of other information is there. Then you have governance information, and then you have the financial statements, right? That's a separate section. Then you can see under that you have the independent auditors report in page number 193, and then you have the financial statements. So shall we go to page number 193? Yes, why not? So you can see here independent auditors report. So you can see the term independent has been mentioned. And then after the addressee is to the shareholders of John Kills Holdings PLC, right? Then report. So you can see the opinion. Okay. Here you can see it's given. Okay. Here it's given. We have audited the financial statements of John Kills Holdings PLC, the company, and the consolidated financial statements of the company and its subsidiaries, the group. Cousin, can you see that? They have included both the holding company as well as the consolidated financial statements. Okay. Both are being mentioned, which comprise of the statement, and they say what are the statements included. And then they say, in our opinion, the accompanying financial statements of the company and the group, both, give a true and fair view of the financial portion of the company and the group. The dates are given, right? And the financial performance and the cash flows for the year. So basis of opinion is given. Key audit matters are given, right? Key audit matters are the significant matters, which is the next standard which I'll cover. And likewise it goes on. Then it says key audit matters. So those are given. So here they have taken key audit matters like impairment testing, because it has significant assumptions. Can you know? But then they also say how they have tackled those significant matters. So those are given. You can see how this is a new trend. Then other information including auditors report, annual report. In the annual report, you saw that there are several other information there, like the director statement, chairman statement, corporate governance information. So the consistency, with its consistent, if the particular inconsistency will be reported. Then responsibilities of the management and those charged with governance. So it's given again very clearly, the management's responsibility. It says, right, what's the responsibility? Yes, to prepare and present the financial statements in accordance with the applicable reporting framework. Here is the Sri Lanka accounting standards and such internal controls, and also the responsibility towards the internal controls that will ensure the financial statements are free from material misstatements, either due to fraud or error. Then also to assess the ability of the company to be a going concern. Then auditor's responsibilities. So yes, the auditor's responsibilities, again, the very important things are given, right? The two responsibilities to see whether there's a reasonable assurance, right? As well as to express the opinion based on that, right? Those are there. And then they have also, in the phase, they have given all. That's it, no problem. Right? Now, Kasun was telling at KPM, the practices that they refer to a website. Sri Lanka Accounting Auditing Committee website. So that's what he was telling. So here it's given all the things, and you can see the information is given, and those charged with governance. Then report on other legal and record requirements. You can see they are given the reference to the Companies Act. And finally, you can see it's written as Ernst & Young. right? Ernst and Young, it's there. Right? So it has not identified the engagement partner for some reason. But here the partners, all names are there. And principals, those are also they are member of the Ernst and Young Global Limited. Likewise, the information is there. Right? The address is Colombo. In fact, it's 201 Disayram Place, right? Colombo 10. But they say Colombo because that's their main head office. And then 204, it's 24 May 2021. About 1 year back they assigned this. Right. So that's what the audit report looks like. So please go, we went through a standard audit report, as well as we looked at examples, right, of JK, one of the best companies, conglomerates I see, right? And you can see the main address is also given over here. So by memory, I told 201 Disayram Place, Colombo 10, because that's where I got my training. And I'm proud to be, right, getting the training from a Big Four. Okay, right. So yeah, that's about the audit report. Right. Then we can go to 701. After that, we'll have a break. Any questions? Is it clear? Paddling. So in the exam, this will be tested as it will ask sometimes what are the contents of a standard audit report. Then you have to explain, and then sometimes it will ask critically evaluate why these elements should be included, what the importance of these elements being included. Likewise, several types of questions could be asked, right? So understand, but however, I wouldn't never ask to write the opinions. You don't need to buy hard the opinions. Who can remember those things? But on the other hand, you'll have to know the elements, right? And then also, I will teach you that in certain circumstances, you have to change, the standard audit report, modified audit report, which I'll teach you, which is going to be very interesting and very important after 701. So after this, we are going to have a small break and we'll discuss about 701. Communicating key audit matters. So key audit matters. What are these key audit matters? And what are some examples? And that's going to be a smaller standard, right, with example. Then 705 is very, very important when it comes to your understanding as well as when it comes to your examination. Right. So we'll discuss what are these things. So important. I discuss these things at length. Then emphasis of matter and other matter paragraph 706. So with that we can finish the thing. So you can see today it's a lengthy session, but I need to discuss these things and explain things so you will understand better, and you can apply that, and you can enhance your understanding as well as you can apply that at the exam. So now it's 70. It's 8:05. So let's take a 15 minutes break. Let's meet at 8:20, right? 8:20 p.m. and we'll continue our discussion. Any questions? Please send me a message. Right? I'll be very happy to answer that after I come back. Right? We come back and we after the break. Okay. So see you there. Okay, students, can you hear me? Okay. Okay, Kushan, thank you, Buddha. Okay, so Dev, thank you. Okay, right, very good. Okay, right. So now you have got an idea of the standard audit report, the unmodified audit report. Now let's see what do you mean by this key audit matters, right? Now, if something is there, first we'll start with the definition, isn't it? So why we need to, first of all, let's see, rather than why, let's see what do you mean by definition of key audit matters. So what's a key audit matter? Look at this definition, read it. Those matters that the auditor's professional judgment, in the professional auditor's judgment, were most significant in the audit of the financial statements of the current period. So it says that these matters were most significant in auditor's professional judgment. Most significant. But that itself is not going to make a matter a key audit matter. There's a second requirement also. See the second requirement. Key audit matters are selected from matters communicated with those charged with governance. So these matters should have been communicated with the top management, the directors. Those charged with governance are the directors. So in a company, right? So likewise, these matters needs to be significant matters, and also these matters needs to be charged, that means communicated with those charged with governance. And so that's what it says. These determining key audit matters, it might be based on areas of higher assessed risk, significant auditor judgments, or effect on the audit, significant events or transactions that occur during the period. So these might be the determinants of key audit matters. Then, yes, these key audit matters, as I told you, should have been communicated with those charged with governance. So let's see what are some examples. Goodwill, right? Goodwill. Now you cannot just say why goodwill is. You cannot just say goodwill is a key audit matter. You have to explain why. Look at here. Under IFRS, the group is required to annually test the amount of goodwill for the impairment. So here it's goodwill impairment. It's a subjective assessment at the end of the year, whether it has gone down or gone up. Usually goes down. So they say the annual impairment test was significant to our audit because the balance excess as a December some date is material to the financial statements. In addition, management's assessment process is complex and highly judgmental and is based on assumptions. Significantly. There are basically the assumptions you can explain as well, which are affected by expected future market economic conditions, particularly those in, and you can say what geographical area, in which countries and geographical area. So you can see impairment of goodwill. Because of the uncertainty, because of the assumption used, it has been treated as a key audit matter, and it should have been also communicated with those charged with governance. Again, goodwill, because it's based on forecasted revenue growth. No one knows, right? Again, assumptions. Likewise, those are some examples. And again, why we need to communicate key audit matters. Now, earlier, before 2016, the audit report did not contain these key audit matters. Why? The reason is given here. So that's where it was first why. So very clearly, the standard says why this standard was introduced, why this key audit matters requirement was introduced. The purpose of communicating key audit matters is to enhance the communicative value of the auditor's report by providing greater transparency about the audit that was performed. Earlier, the report just said the financial statements are true and fair. That's all. Right? That's all what it said. But now it goes beyond and tells what were the key audit matters, what were the significant matters that the auditor had come across. So it increases what? The communicative value. The readers will get a better understanding how the audit was done and what were the issues that the auditor had encountered. So that's why better to communicate this, and that's why the standard was introduced. So I think now you know why key audit matters were introduced in 2016, and then the definition, then certain examples. Okay, so that's about key audit matters, a small standard as I told you. So now let's come into a very important standard, right? 705. These are modifications to the opinion in the independent auditor's report. It doesn't say qualifications, it says modifications to the opinion in the independent auditor's report. So this one you have to understand very carefully. A very important standard when it comes to audit report, and which will be very much important when it comes to your examination as well, particularly in terms of application. Okay. Now it says modified opinions. Modified opinions means now here the modification is done to the standard audit report that was explained in ISA 700 revised. I think you can remember the first standard I discussed today. So if you do any kind of modifications to that standard report, we call it a modified report. So what kind of modifications we could do? When it comes to modifications, you will see this chart. This is very important. Please try to understand. So there are modifications to the audit report. So standard audit report in ISA 700, you can do the modifications in two ways. The modifications can be in two ways, right? The modifications can fall under two categories, in other words. So what's that? The first category, the modifications that impact the auditor's opinion. You can modify certain elements in the standard audit report, which was told, which I explained in ISA 700. Can you remember? ISA 700 I explained revised. So you can do modifications that impacts the auditor's opinion. That impacts the auditor's opinion. Or you can do some modifications that do not impact the auditor's opinion. So there are certain modifications that you do in the report that has nothing to do with the auditor's opinion. The report is modified, but it doesn't impact the opinion. So there are two things like that where you can change the audit report, standard audit report I explained under ISA 700. That has nothing to do with the audit opinion. It doesn't impact the audit opinion, but it will emphasize a matter, or it will explain some other matters, which is explained in the next standard, 706. But these emphasis of matter and other meta paragraphs are included under ISA 706. So therefore, kindly understand, very important, you will do modifications into the standard audit report, right? That will fall under two categories. The standard audit report එක modify කරනකොට ඒක බලපාන විදිය අනුව categories දෙකකට බෙදන්න පුළුවන්. එකක් තමයි that impact, one is that impact the auditor's report, the auditor's opinion. The other one is that do not impact the auditor's opinion. That do not impact the audit opinion falls into two further categories. That's emphasis of matter as well as other meta paragraphs. So first of all, you have to understand this. Is this clear? Clear නැත්නම් ආයිත් Is it clear? I hope so, right? Then now let's see. Okay. Right. Good. I'm getting responses. Okay. Good. All right. Then comes, I will take the first one. Modifications that impact the auditor's report. Now, this is the first category in the earlier diagram. There are two things or two circumstances where you will modify the auditor's opinion. Then in the earlier diagram, I told you that there are two kinds of modifications that you can make that impacts the audit opinion, and that you will do a modification, but it won't impact the auditor's opinion. Now I'll take the first category. Actually, the first category is the scope of this standard, 705. So there are two ways or two circumstances that could impact the auditor's opinion. Right? You will make a difference, you will make a change, you will make a modification. One is called if you disagree with the management. So you will change the opinion, you will modify the audit opinion, standard opinion, which says the financial statements are true and fair. You will modify that due to two reasons. The first reason is if there is a disagreement. The second reason is if there is a scope limitation. You are trying to get information, the client is not giving that information. Let's take the first one. Due to disagreement, meaning the auditor and the client is in disagreement. They don't agree on something. Let's take an example. The auditor says, the auditor audits the financial statements and sees that motor vehicles are not depreciated. Right? Now say you are the auditor, you go and audit a company, and in the company you see the motor vehicles are not depreciated. So is it correct? Can you not depreciate motor vehicles? Now this is not a motor vehicle company that's selling and buying motor vehicles. This is basically a manufacturing entity which has some motor vehicles and it has not depreciated the motor vehicles. Is it correct? What's the standard that's violating? What's the standard that if you don't depreciate, what's the motor vehicles of a manufacturing company that you are using for manufacturing? Yes, LKS 60. LKS 60. What's LKS 60? What's LKS 50? Property, plant and equipment, PPE standard. So you have not. So now the auditor goes to the accountant and asks, why don't you depreciate? The accountant looks at you and tells, my boss, the proprietor. The proprietor doesn't want to depreciate. I'll say, you know that. I will then say that you know you are a professional accountant. It has to be depreciated. Then you will say that the accountant will say, you can speak with the proprietor. Proprietor is the owner of that company, the main shareholder. You go to that man, that's the CEO as well as the managing director. And you go to that person and you say, why don't you depreciate? It's requirement of Sri Lanka accounting standards. LK 16, property, plant and equipment, to be more specific. Then the proprietor says, right, I don't care about those stupid standards. I bought this motor vehicle. Right, I bought this motor vehicle for 2 million. Now the market value is 10 million. So what your stupid standards are saying? It's not depreciated, it's appreciated. And he will say further, look at here. Are you living in Sri Lanka? Do you know what's the value of the dollar? These things are appreciating. So your stupid standards are wrong. I'm not going to change anything. You do whatever you want. Then what you can do? What can you do? Right? Jump up and hit his stomach. The panel barata gahane ka. Or take a pistol out and shoot him, or tell him that I'll shoot you. You do the required depreciation. Can you do that? In a civilized country, in a civilized profession, we don't do those things. The panel barata denne. Jump up and hit the client or the customer. In that, we don't do that. Auditors don't do that, at least. And we don't use weapons to threat our clients. What we can do maximum? What we can do? We can disagree with that man. And we can reflect that. We can reflect that in our audit report. Meaning we can change the audit report. We can change the audit opinion. We can change the audit opinion. So that's a disagreement, right? There's a disagreement and the client is not ready to make any changes. We think that's material, but the client is not going to make a change. That's called disagreement. You cannot hit the client, right? You can change your opinion, right? That's what you would do. Even if you disagree with people, don't try to attack them, kill them, hit them. No, that's not, as auditors, we never do that, right? Auditing is a civilized profession. So that's a disagreement, an example for disagreement. On the other hand, there also might be scope limitation. Now, on the other hand, you go and ask, okay, where's the information? I need to check the inventory. Then the accountant will scratch the head and tell, you see, about 1 month before you came, the warehouse got, the warehouse that had all the documents, accounting records, the invoices and everything, that got, a big fire occurred and they got destroyed. And I say, where's the computer records? That the computers also were there and it also got destroyed. Did you maintain backups? No, we don't maintain backups. Even in certain sensitive government regulatory agencies, like where you have this medical kind of supplier registrations and those kind of medical information, particularly drug information, even their backups are not maintained. And can you expect that we to maintain? So it's not that we disagree with the client. The client is unable to give us the information. So that amounts to scope limitation. Our scope is the financial statement information and client is not giving that information to us. That amounts to limitation. It can be either due to circumstances, like I told, it might be fire, or maybe it's purposely not given by the client. Maybe some entertainment expenses of directors, they are not ready to give that because they cannot disclose that in public. The directors might have gone to Thailand, and one international cricketer, what had happened, and that's a mystery how he had died, or maybe they also engaged in such kind of activities. So you cannot tell that. Evidence of the private ledger, we call it private ledger in companies. Although the auditor should be given access, they are unable to give that access because you cannot disclose what's there. So it's like it's created by the client, not by circumstances. The client is not giving that. But however, that's scope limitation, not disagreement. So these two circumstances can impact the auditor's opinion. What? One, disagreement. You can see it over here. The other one is scope limitation. Right? Then, perfect. Is it understood? So I told there could be two kinds of modifications, one that impact the auditor's opinion, then the other ones that do not impact the audit opinion. Then I came into that impact audit opinion. It could be either due to disagreement or due to scope limitations. Is that clear? Madeline? Right. Good, okay. Okay, Dave is asking a good question. As an audit associate, we can't do anything, but we can inform that to our seniors, of course, project managers, then they will modify the opinion. They have this kind of situation. Yes, of course, Putha, yes, indeed. So the best thing is if you encounter these kind of situations, don't fight with the client. Professionally make the request, and if they are not going to tell your senior. If you are the senior, tell your manager. The manager, if you are directly dealing with the partner, you tell the partner. So let them decide. So maybe the client will show the private ledger to the partner. And next time they both might go to Thailand for that activity. Right. So that's their thing, and lose the independence as well. Okay. So yes, Putha, that's what the reality is. So we'll not that the client is colluding with the partners, but sometimes they might give the information they might show it to the audit manager, or they might show it to the audit partner directly, and they might not be comfortable in showing if they are not comfortable in showing that to you. True. Okay. Now let's come back to this now where you are trying to modify the opinion. So I told you that there could be disagreements as well as there could be scope limitations. Now, when it comes to disagreement as well as scope limitations, sometimes the misstatement might be material but not pervasive. In other times, it might be material as well as pervasive. Right? This is not persuasive, it's pervasive. This term pervasive here is pervasive. The meaning is that it impacts holistically the financial statements. Holistically. The entire financial statements are impacting on it. Because sometimes the information, if it is immaterial, then it doesn't impact at all the audit report. But here it says it's material, but not pervasive. Let me give you an example. Let's say a situation like this. Now, when the management was preparing the financial statements, they have taken a prepaid expense and put it as trade receivable. A prepaid expense, they have put it as trade receivables. Is it a problem? Is it an issue? Yes. There's a classification issue. So first thing what you do is, right? So the statement of financial position, the balance sheet is wrong because there's a material balance that is a prepayment has been classified as accounts receivable. So what you'll do is you will go and you will tell the client, right? You will tell the client, so please rectify this. The client would look at your face and tell, we do things once. We don't do changes. So we have prepared the financial statements. And yes, there might be errors. We agree, but we are not going to change. We touch things only once, and we have enough things to do, right? And we are not ready to change. Then what can we do? Put the panel up, then the client give it. Jump up and hit the client's stomach. No, we don't do that kind of things. Take the pistol and put it to the head and ask, do the change? No. No, we don't do that. Take a bat, not to play cricket, but to hit him. No, we don't do that. What we'll do is, we'll ask the client to do that. But if that person is not doing that, then there's a disagreement. Now you can see it's a material balance. A material balance that has been misstated, right? Misclassification. Prepayment, put it as a trade receivable. Only in the balance sheet that has occurred. My question is it material? Yes. It's a material misstatement. Say, let's say it's 1 million. Maybe the material level is 100,000. So 1 million is material. But is it pervasive? Pervasive means whether it impacts the total financial statements? No. It only impacts the current asset section of the balance sheet. It's material, but not pervasive. But let's see a situation like this. The client has purposely increased sales by 1 million. Right? Again, the material level, let's say it's 100,000. The client has increased sales by 1 million. Now what happens? If sales value, the revenue has increased by 1 million, the gross profit will be wrong. The net profit will be wrong, right? Then if you use the indirect method, your cash flow statement will be wrong. Then those things goes in the net income and you pay whatever the changes of equity statement will be wrong. If you pay dividends, whatever, then the balance will be going to the balance sheet. The balance sheet will also be wrong. Now my question is, does it impact only a section of the balance sheet or does it impact the entire financial statements? If you made a misstatement in revenue, it's material and as well as what? Pervasive. Pervasive means that holistically, major portion of the financial statements being impacted. Earlier, it was material, again it was 1 million, but it impacted only the balance sheet. That also current assets. So therefore, based on that, your opinion will be, the modification will be different. Again, both are disagreements, right? The client is not ready to change anything, saying that he or she does things one time. Such kind of, people are there. So in the first instance, it was material. You can see it, material, but not pervasive. Only it impacted the balance sheet current asset section. The second one, when you misstated the same amount, but revenue, it impacted the entire financial statement. It's material and pervasive. So if it is material but not pervasive, you give a qualified opinion, or you call it the except for opinion. What it means is it's material but not pervasive. So you will say except for classification of account receivable, the financial statements are true and fair. So except for that particular balance or class of transactions, others are okay. That's what you tell, material but not pervasive. So except for that balance. So we call it qualified opinion. But on the other hand, when the financial statements are totally cooked up or totally impacted and the client is not ready to change that, then we cannot tell that the financial statements are true and fair. We will say the financial statements are not true and fair. That's what we call adverse opinion. Because you cannot agree, not for one balance, you will tell the entire financial statements are true and fair, not true and fair. You will say financial statements do not provide a true and fair view. So that's what we call an adverse opinion. When things are material as well as it's pervasive, there is nothing good in the financial statements. You will say the entire financial statements do not present fairly, right? Do not present fairly in all material aspects, or do not provide a true and fair view. That's an adverse opinion. It's a very strong opinion. I have not seen that much of opinions of that nature, but yes, the auditors could give them. But on the other hand, when there are disagreements, usually what I see is those are material but not so pervasive, meaning that it doesn't impact the entire financial statements. So you give a qualified or except for opinion, except for that particular balance, accounts receivable classification, and prepaid expense classification. Others are fine, except for accounts receivable. The financial statements provide a true and fair view. Provide a true and fair view. So that's due to disagreement. Is that clear? Clear. You have to understand this very clear. It's very simple, right? Just follow my, the explanation, so you will understand it very well. Right? Not difficult, but you have to understand. Okay. Yes. Entire finance. Yes. Very. Okay. The same thing can happen for scope limitation. Now I told that disagreements. Right. Now scope limitations. Now depreciation also, if the client has not depreciated at all, telling that the value has gone up, then it's going to impact the entire financial statement. And of course, we have to give an adverse opinion because that's a critical balance. And it's going to impact the entire financial statement. The scope limitations are also, now you go and ask information. The client always tells it's on fire. It's high backup, backup ne, right? So backup has not been kept. So it amounts to scope limitation. The auditor cannot check a single document, right? So if it is material and pervasive, right, the revenue cannot be checked. Or some very important inventories, then inventory also, final inventory. If it cannot be checked, it's going to impact all the things, right? It will be used for cost of sales calculation. So gross profit will be impacted, net income, right? Nothing could be checked. Yeah. So that's going to be a problem. So if it is material and pervasive, and if you are unable to verify the financial information in the financial statements, right? If it is material and pervasive, then in that case you cannot give audit opinion. Right? You are unable to check material balances as well as on a pervasive basis. In that case, you cannot give an opinion. We call that disclaimer of opinion. You disclaim, meaning that you will say, we are unable to give an opinion. We are unable to give an opinion. Disclaim. You tell the entire, regarding the entire financial statements, we are unable to give an opinion because of this issue. You will have to tell what's the issue very clearly. But after that. On the other hand, if only, let's say, if you're unable to maybe check a certain balance, which is material but not pervasive, in that case, you can again provide a qualified opinion or an except for opinion. Same thing, qualified except for, as we told earlier. Except for that particular balance, the financial statements provided true and fair. You are unable to check that balance, and you will be explaining that balance was unable to be verified. If it is material but not pervasive. So again, qualified opinion means an except for opinion. Except for a certain balance or class of transaction or disclosure, the others financial statements you agree provides a true and fair. So these are the four circumstances based on two main issues, disagreements, scope limitations, that the auditor's opinion could differ. The auditor's opinion could be changed, modified than the standard opinion which says true and fair. Is that clear? You have to understand this very clearly. It's very important and very interesting as well. Clear? Clear? Okay. Okay. Now the same thing. Now this one are my illustrations. I used to teach this in this manner. First, I'll say that there are two kinds of modifications in the standard audit report that will impact audit opinion and that will not impact audit opinion. Then when it comes to impacting the audit opinion, there are two kinds, disagreements and scope limitations. Then whether based on whether the particular item, particular issue is material and pervasive or material or pervasive, material or not pervasive or material and pervasive, you will be giving an accept for opinion or a qualified opinion, or if it is a disagreement, then an adverse opinion saying that the financial statements do not provide a true and fair view, or you will say, if it is a disclaimer, and if it's so material and pervasive, you will disclaim the opinion. Disclaim means you will not give an opinion, or you will give an accept for opinion. Simple, right? So the same thing in the auditing standard is given like this. Same thing. So here it says financial statements are materially misstated due to disagreement. So you can even say within brackets due to disagreement. This is what the accounting standard says, which I have taught you now. Same thing. You can see here. Right. So disagreement over here, material but not pervasive, then qualified opinion, also known as accept for opinion. So disagreement, material and pervasive, it's adverse opinion. Okay. Then inability to obtain sufficient and appropriate audit evidence, that's scope limitation. If their scope limitation is material but not pervasive, it's a qualified opinion. Material and pervasive, you are going to give a disclaimer of opinion. Same thing given in a different way. Right? Yes, indeed. Udesh is asking what's the most severe opinion that you can give. It's again, Puta, based on whether it's a disagreement. If there's a disagreement, the most severe thing is the adverse opinion. If there's a scope limitation, the most severe thing is the disclaimer. That's not nice. So Devi is asking a good question. Sir, what will happen when client give the documents? So auditor, after the day, keep it with auditor's room in the client's place, then it's missed. So how we behave that kind of situation here under the due the scope limitation or responsibility of the auditor. It's like this. Now what Dave says is, now the client has given certain documents, but then next day it's not there. Right. So it all boils down to audit documentation. What does the audit documentation standard say? Now, let's say the client has given certain documents, the auditors have got that. My question is, those evidence, those documents, the auditor has obtained, who has the ownership? Who has the ownership? Legal ownership is who? I say client has given, let's say, inventory documents. The inventory documents have been given. Now the auditors have got that, filed it in their current audit file. My question is, the legal right is of whom? Auditor get the client. Auditors, it's audit documentation. Now it's with the auditors, so audit documentation. So auditors will have to keep it in lock and key, and they have to take the keys away with them. Right? They cannot just leave it on the table. And if it is lost, then it's your responsibility. Right? Understood, Dave? So therefore, it's very, very important to keep it lock and key. On the other hand, now, if it is in lock and key, and if you had taken adequate measures to protect that, and if someone has robbed that, then you have to go to the police, CID, police, and everywhere, and tell that it's robbed. And you have to make sure. You have taken adequate safety precautions. You have to take adequate safety precautions. If not, you are negligent. You are negligent. So simply, you have to go with the standards. Standards are very clear. Auditing standards are very clear. Vajra should have taught you under documentation. Who is having the custody? Custody, ownership. Ownership is with the audit. So they cannot say if it is wrong, then they'll have to go for legal. If they had taken precautions and kept it lock and key. Right? Therefore, never leave any audit evidence on tables, right? Put that in a cupboard, get a cupboard that could be locked, put all things there, lock it, take the key, and you go. If not, you are going to be in trouble. ඒක කඩලා අරන් ගිහලා තිබුණොත් කෙලින්ම what you can do, someone has broken that and taken, you directly go to the police. You first inform the client and go to the police and inform that yes, it's being robbed. That's a different story. Okay, good question. And in fact there are cases as well, right? So now I think it's clear. Now let's see some examples. Now see, here is a qualified opinion due to disagreement. Now see here what has happened. In our opinion, except for the effect, so it's a qualified opinion, except for the effects of the matter described in basis of qualified opinion section in the report. So if there's a qualification, you have to add the section called basis of qualified opinion, right? And see what has happened. The company's inventories are carried in the statement of financial position at some value. Management has not stated the inventory at lowest cost and net realizable value. So they have violated that requirement in inventory valuation, but has stated them solely on cost. So they have violated an accounting standard. So there's a disagreement. And they are told to rectify that, but the management disagrees. So, but it was not, according to their opinion, right? It was not, it's material, but not pervasive according to their opinion. And therefore, except for the effects of matter described in the basis of qualified opinion in our report, the accompanying financial statements present fairly in all material respects or give true and fair. So except for that particular issue, the financial statements are true and fair. So this disagreement, material, but not pervasive. Then let's take a situation where adverse opinion. So there is a disagreement which is material as well as pervasive. You see, as explained in note X, the group has not consolidated the subsidiary. So in preparing consolidated financial statements, they are not taken into consideration an entire subsidiary. So you can see the entire group financials are gone for a 6. So then what you're going to say is this, right? You're going to say the accompanying consolidated financial statements do not provide a true and fair view. So that's the harsh opinion that the auditors could give. Right. Then qualified opinion. Now here it says, so basically this one says it's again except for, and here what has happened is an associate. So the auditors are unable to access records of an associate of a company of that group. So they will say, since it's only an associate, not a subsidiary, and they are unable to access that information, right, because of maybe due to war in that country or due to fire of that certain company, they are not given, they are unable to obtain information. So they will say, in our opinion, except for the possible effects of the matter described in basis of opinion in our report, the accompanying consolidated financial statements are presented fairly in all material respects. So present, give a true and fair, except for of that associate, information on that associate. So always remember, you have to give the basis of qualified opinion, right? But on the other hand, sometimes entirely, if you are unable to get, information here, the group's investment in joint venture XYZ, that's a more important one, is carried out at some certain amount on the group's consolidated statement of finance, which possesses 90% of the net assets. So important of this, joint venture of XYZ, and 90% of the net assets are coming from there. And that information is not given by the client. Right? So the auditors are unable to verify 90% of the net assets. So in that case, You will say disclaimer of opinion, meaning that you are not going to give an opinion entirely on the financial statements, not only a certain balance. So you'll say, we do not express an opinion on the accompanying financial statements. So you are not going to say whether it's true and fair. You are going to say you are not going to give an opinion. So this is again a harsh decision. But again, sometimes you have to do that. Right? Is it clear? So I taught you the theory and I gave you some examples. At the exam, how this is going to be tested is the most interesting thing. I will never ask you to write the opinions. Right? Don't worry about that. But I'll give you small scenarios and I'll ask what kind of opinion that you have to do, you have to express. Right? Now, for example, okay, there's a massive balance of certain like a subsidy as it told, and you are not able to check that. Then what's the opinion that you're going to give? Likewise, I'll be giving small scenarios and asking what opinion you should give at this instance. So that's how this is going to be tested. But on the other hand, I'll never ask to write the audit opinion, because why you should memorize all these things. Right? So I would not like to answer such kind of questions. So why my students should do that? The standard wording is there. You don't need to remember. It's a computer can do that. I want you to make the proper decision by looking at the scenario and see what kind of opinion is applicable. Okay. Understood? Pedro. Okay. Right. So, but I hope my students will watch the, the video later and then you can learn. Okay. So that's about ISA 705. So I taught you ISA 700 revised, the contents of a standard audit report. Why it's standard? Because unmodified report. Then ISA 701, key audit matters, a simple standard. Then 705, what are the modifications? Particularly 705 discusses what are the modifications that you can make on the standard audit report that impacts the auditor's opinion. Then we shall come into ISA 706, which says you are going to change the standard audit report that I explained under ISA 700 revised, but it doesn't have an impact on the auditor's opinion. You change certain things of the standard audit report that I taught you under ISA 700, but here it does not impact the auditor's opinion. So here we are discussing two things, emphasis of matter and other matters paragraph. So what are emphasis of matter? Please read. A paragraph included in the auditor's report that refers to a matter appropriately presented or disclosed in the financial statements that in the auditor's judgment is of such importance that is fundamental to the user's understanding of the financial statements. Right? What it means is there's a significant matter that has been already properly accounted, disclosed in the financial statements. And what the auditor is doing is, the auditor is emphasizing that. So there's no disagreement, there's no impact on the opinion, there's nothing. The auditor is just emphasizing in good faith that is there. Let's say there's a significant lawsuit against the company. So still it's not decided. So it's a contingent liability. Right? In that case, the financial statements in note X might disclose very clearly that about this court case against the company. So there's nothing wrong. The financials are okay. But on the other hand, the auditor thinks that we should emphasize that. So without modifying the opinion, the auditor will add the paragraph in the audit report saying that, emphasizing that particular note, saying that in note X, this significant issue is there. So they'll say we would emphasize that without qualifying the opinion. So that's emphasis of meta paragraph. You are emphasizing. You are not qualifying the opinion. You are not doing anything, modifying the opinion. You are just adding this emphasis of matter. And since such kind of thing was not in the standard audit report under ISA 700 revised, these are modification, this amount of modification, but it doesn't impact the auditor's opinion. Then other meta paragraph, a paragraph including the auditor's report that refers to a matter other than those present or disclosed in the financial statements that in the auditor's judgment is relevant to the user's understanding of the audit, the auditor's responsibilities, the auditor's report. So you can again put any other information that you think it's important. But I think now other matter is not that much relevant because under ISA 701, you cover a lot of things. Right. Now see, emphasis of matter. So yes, emphasis of matter paragraph may be necessary. So see some examples. Right. Now, these are some situations you can emphasize something. When financial reporting framework prescribed by law regulation would be unacceptable, but for the fact that it is prescribed by law regulation. Now, let's say the law regulation in a country requires the company to prepare the financial statements using a particular standard, but which is unacceptable. But they had to do that because that country requires that to do. So you can emphasize that matter, what the poor company could do and the poor auditors could do. To alert users that the financial statements are prepared in accordance with the special purpose framework. Now, special purpose framework is not the general purpose framework like IFRS. So sometimes the financial statements might be prepared based on a special framework. So to emphasize that fact. When facts become known to the auditor after the date of the auditor reports and the auditor provides a new or amended auditor's report. So subsequent events, sometimes the auditor can give a new information, new audit report, so the auditor could emphasize that. And also these kind of examples. An uncertainty related to the future outcome of an exceptional litigation, as I told you earlier. So they have disclosed that in the notes, but they are emphasizing that. So the auditor has done, the accountants or the financial statements have nothing wrong, they are emphasizing that. Right? And then a significant subsequent event that occurs, right, between the date of the financial statements and the end and the date of the auditor's report. Early application when permitted of a new accounting standard. Sometimes there are accounting standards that says that you have to just apply after a certain date, but voluntarily you can adopt it even before that date. In that case, you can tell that you can emphasize that matter. A major catastrophe that has had or continues to have significant effect on the entity's financial position. So maybe half of the company has burned down, right? The plants might be burned down. Then in that case, you can emphasize that matter, although things have been disclosed properly. Right. So other matter. Now here particularly, a law or regulation may require that the auditor to communicate about planning and scope matters in the auditor's report, or the auditor may consider it necessary to communicate about such matters to an other matter paragraph. So usually we don't see other matters, but I see a lot of times emphasis of meta paragraph, which we told earlier. See, I have given some other meta paragraph situations that legal requirements might be there. So examples are there, you can read. Look at here, other meta paragraph, emphasis meta paragraph, other meta paragraph. So emphasis of matter. Okay, examples. So these are situations you can, how you can provide examples. Already I told you this. Now see, now this is an example. Now you'll give, now in the standard audit report, you will have the opinion, the basis of opinion. And then you can see the emphasis of matter is given after the opinion, not before. So if you give before, it might mean that impacts the opinion. So here you can see emphasis of opinion is just given even after basis of opinion, you can emphasize the matter. We draw attention not except the financial statement, we describe the effect of a fire in the company's production facilities. Our opinion is that opinion is not modified on this matter. So see, we have just emphasized a matter. And after that, you can place the key audit matters. And then you can put other matter. The financial statements of ABC company for the ended, right, some year were audited by another auditor who expressed an unmodified modified opinion on those statements on March 31st, 2000 something. So likewise, you could express those other matters. Then other information, meaning information in the annual reports, we could include that. Right, likewise, you could have then other information. Then you can come up with the responsibility of management and those charged with governance, then the auditor's responsibility and rest of the things, right? Okay, so that's what, right? Particularly keep attention, pay attention to, right, when it comes to examination, emphasis of matter paragraph, right? We usually see those things in the financial statements, audits, as well as in the financial statements, audits, in auditors' reports. Okay, that's it. So I think we had a very nice discussion today, a lengthy discussion, right? So particularly today, what I wanted to emphasize is actually it was 4 audit standards on reporting. So 700 revised, then 701 key audit matters. 700 revised is on the standard audit report. So we discussed in and out. Then we discussed about 701, which is key audit matters. We discussed what are key audit matters and some examples. Then most importantly, we discussed about what? 705. 705, we discussed about the modifications. I told that for examination, I'm going to give you some circumstances and ask you what's the audit opinion, what are the modifications that require, if any. Then 706, about particularly I emphasized on emphasis of matter paragraph rather than other matter paragraph, emphasis of matter paragraph. Okay. So we did a lengthy discussion. Any questions? My goodness, it's already 9:17. I did not feel time going, right, because it was so interesting. Yeah, any questions? You can ask me now. Is it clear? Okay. Yep. People are saying it's clear. Great. So yeah, so please go through the standard, right? Akhil is asking about the exam. So actually, I today got, I don't know whether it's already communicated to you, but let me show you what I got from the faculty. So let me take you to my email. So I can show my email to anyone. There's nothing to hide. Even I could have given, my email password to you if there's no examination papers in it. But we have examination, passwords, examination, and things like that. So, right. So this is, let's say, Dean's office. We'll see what we have got here. Today I got this at 8 p.m. I think we also have already got this, maybe. So here, Dean's office is explaining this the amended academic calendar, and in fact, the amendment was proposed in 1st June 2022. So I think it's already what's there. So I don't think it's a brand new one. But again, I think as a reminder, it was sent. So you can see we are going up to 24th July, the lectures. And then we are going to have from 25th to 7th, right, August, we are going to have the study leave. And the semester examination will be from this period, 8th August to 28th August. 3 weeks, during 3 weeks we have that, and then we have the vacation. I think this is what was, maybe updated, the, thing that was updated to you as well. Am I correct, Akila, Kasam? මේක නේද දැන්ටමත් මම හිතන්නේ most updated ඔයාලට දීලා තියෙන මේක තමයි මම හිතන්නේ. I think that's what you are thinking. I don't know. If not, this part was sent to us today as a maybe as a reminder, and so keep that in mind. We were not updated. Okay, පුතා ඔයාලට shortly මේක ලැබි. But this is what was sent to us. Right, අපින් ඒක එකක් තමයි. So this could be examination. So we'll have lectures till 24. And also now the next lecture, Akhil, what we call this, Vajra sir. Vajra sir told that he will have it on 10th. 10th is a Sunday, right? So we'll see. I will update Kasun. Kasunta කියන්නම් ඒක තියනවද නැද්ද කියලා on 10th, right? 10th is a Sunday. So because sir is facing a small difficulty, and so he proposed to have the lecture on that day, 10th. So we'll have that lecture on 10th if he's ready to do that, and we can go ahead with that. And then on 13th, I believe that there's a problem because it's a holiday, so we'll not have lectures on 13th because I think it's a for a holiday. Yeah, Akhil, I also saw that. Let me check what has happened. There are videos මොකක් හරි download වෙන්නේ නැති පාටක් වෙනවනේ. I'll check what has happened. In fact, I saw that. Let me see. I tried to upload it, but I don't know what has happened. Let me check that. Thank you for informing. Okay, so great. We had a very productive session today, although we see very less amount of students. But I believe they are watching the videos. But sometimes I wonder whether they watch the videos also, because you know why. Now let's see. Let's go to my place where I have my videos. ඒකේ දානවා. ඒකේ දානවා. Okay, Dev, thank you. It's my pleasure, Buddha. And it's my duty also. So let's go to my place where I'm uploading videos. Right. Okay. So this is my content. So let me check, Akila, what has gone wrong. So see, it says, now this is the 2 lectures that so I'm trying to upload that on the morning. So see, it says still 0% upload pending. I don't know why. We'll need to see. Then let's say now this is the 15th June lecture, right? Can you see the view count? You know the view count. 15th June lecture. Now in the lecture there was only about, let's say, 50 people. But can you see the view count? This is how much? 72. 15 June. So I don't think students are watching videos and they are prepared. So my evidence indicate otherwise. Right? My evidence indicate otherwise. So I can't help. What can I do? I taught you how to study, even how to study, and some methods of how to study. And I showed you what's the future you can get. Today I showed you two individuals, Mr. Supun Veerasinghe as well as Mr. Sanjay Banda, one of our prominent, not one of our, two of our very prominent graduates of our proud Department of Accounting. We are very proud of. And so why can't you, and I motivated you to achieve those targets, but seems people are not interested. So it's up to you completely. Your life, remember, is in your own hands, not of the government, not of anyone else. It's in your hands. So if you want to have a good life, a successful one, right, work hard, work smart. No other recipe, no other shortcuts. Okay. So with that last words, thank you very much and wish you all the very best. Think always positively, right? Think about 10 years from now where you want to be and gradually implement certain procedures, do step by step, keep baby steps, right? Work hard, wake up in the morning, study, allocate time for studies. Don't say that you don't have time, that's a myth. Right? If you really want to do certain things, you will have time, you will allocate time and you will do it. Don't wait till the last moment. Things might be very different, and who knows, you might be not well. Who knows, there might be other calamities in your life. So why not to start now? Allocate time, study, prepare well, and things will be very good. With that last words, thank you very much and wish you a good night. Please take care. Okay, Buddha. Please take care. Good night. Getting several messages. Please take care. Bye bye.